a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about travel ETFs. And travel stocks, particularly airline stocks, have been taking off lately, and that is mainly because these COVID restrictions are being lifted, and there is hope now that COVID may actually become an endemic instead of a pandemic. So last week, Delta reported very strong results and they returned to profitability during the first quarter. And the management said that the demand for travel was so strong that the company was able to offset higher fuel costs with higher ticket prices. And in fact, we have seen that air ticket airfares have been going up, and jet fuel, the price has almost doubled since last April over the past year, because we know that oil and energy prices have surged due to war-related disruptions. But airlines are able to pass on these costs to the customers. And in the current environment of rising rates, rising inflation, and slowing growth, investors are looking for companies that have pricing power. And it seems that airlines are among those stocks, and particularly because the American consumer remains very strong as of now. There's a lot of saving, and because of pent-up demand for travel, they are willing to spend as of now. Now, with testing mandates being lifted, international travel is also coming back slowly, and corporate travel has also increased. But we should remember that corporate travel, which is one of the biggest source for profitability for airlines, that may never return to pre-pandemic levels, because many people just hold meetings over Zoom now. So let's take a look at three ETFs which invest in airlines and other travel-related stocks. So the first one I'm highlighting is Jets ETF. Ticker symbol is Jets, and it is the only pure play airline ETF available to US investors. It holds US as well as non-US other global airline companies and operators. Pretty popular with 3.4 billion in assets and has an expense ratio of 60 basis points. You can go to the quote page on Zacks.com to learn more about this ETF. Read our research report. I also did a podcast some time back with the provider. You can go to the external homepage using the link on our quote page, and you can read more about what this ETF holds. So global airline industry, including operators, manufacturers, if you look at the holdings, the big four US airlines, American, United, Delta, and Southwest, they have about 10%, 11% weight each in the portfolio. And then you see more smaller US airlines and Canadian airlines, Spirit, Sun City, Alaska, Air Canada, SkyWest, and then other international airlines, and then manufacturers like Boeing as well. Now, the second one I'm highlighting is by ETFMG. This holds technology companies which are involved in global travel and tourism. The ticker symbol is AWAY. It has about 285 million in assets and 75 basis points expense ratio. Again, to learn more, please go to the quote page on Zacks.com, and using the link, you can go to the external homepage, and you will see that it holds technology-focused companies within the travel and tourism industry, and that is because most millennials, they use their smartphones, and the technology companies, the web-based providers for booking their travel. So about 55% exposure to travel booking and reservation companies, then about 16% to travel price comparison companies, 14% to ride sharing and hailing companies, and 15% to other travel advice companies. You will see these are the top holdings, including Airbnb, Booking Holdings, Expedia, Uber, TripAdvisor, etc. The third one I'm highlighting is the newest, smallest, and the cheapest in the space. Just 42 million in assets as of now, and has an expense ratio of 45 basis points. Ticker symbol is Cruz. Cruz, this is by defiance. It holds airline, hotel, as well as cruise stocks. So again, you can go to the code page on Zacks.com and the external homepage. See there, you can read their research articles and you can look at the holdings as well. So Norwegian Cruise Lines and Royal Caribbean, these are the largest holdings as of now, 9% and 8% weight. Then Carnival also about 8%. Then you will see some hotels, Marriott, Hilton, then some airlines like Delta, Southwest, etc., United too. On the next two slides, I have the competitive performance versus the S&P 500 index, and all these airlines have significantly underperformed the S&P 500 index over the past 10 months or so. I compared the performance since Cruise's inception, which is the newest in the space. So you will see that Cruise is down about 11%. Then the Jets ETF is down about 14%, and Away is the worst performer because we know that technology stocks have taken a beating, and particularly high growth tech stocks. So that is why that is the worst performer, and all three significantly underperformed the S&P 500 index. But if you look at the performance this year, all have outperformed the S&P 500 index. The Jets ETF and Cruise ETF, they are almost flat for the year. Away ETF is down about 5% for the year, and the S&P 500 index is down about 8% this year. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Make sure to subscribe to our videos so that you do not miss anything, and we will see you next week.